Welcome to XM.com for the weekly outlook. I'm Christina Marujas, and joining me today is senior investment analyst Rafi Boyadjian. We'll be having a look at the week ahead, which is accommodating a lot of central bank meetings. And of course, central banks are in the spotlight lately. Markets are expecting them to provide them with more stimulus to help the economic outlook. We saw the Fed unexpectedly cut rates earlier this month. We have the Fed meeting coming up this week on Wednesday, where again, markets are expecting a rate cut. The question is, how aggressive do you think the Fed might be, and how will the dollar be affected?
Well, that is a very good question because markets are now pretty certain that the Fed will cut rates by 100 basis points. That would take the Fed funds rate very close to the zero range, but it's not quite so certain whether the Fed will be willing to use up all of its ammunition straight away. Now, we've seen those rate cut odds fluctuate depending on where sentiment was moving in terms of the likelihood of a fiscal stimulus. And now that it's looking unlikely that we're going to get a big fiscal package from the US government anytime soon, markets are hoping that the Fed will make up in the absence of fiscal package with additional monetary stimulus, but the Fed may prefer to keep some ammunition for later and announce some other measures, mainly aimed at helping businesses cope during this crisis. But also there is speculation that they might even relaunch their quantitative easing program. They announced this week $1.5 trillion. They actually injected $1.5 trillion into the markets. So maybe that was a precursor for possible QE announcement next week. If they do go ahead with a big monetary stimulus package next week, that's likely that could possibly weigh on the dollar a little bit, which right now is actually on the way up, rebounding sharply. So we're likely to see quite a lot of volatility in the coming days.
Now, the Bank of Japan is also meeting this week on Thursday, where, in spite of other central banks, it appears the BoJ will not follow their footsteps and not change its policy. What are we likely to see out of this meeting?
Well, it's looking very unlikely that we're going to get a rate cut by the Bank of Japan, but we may see some other measures. Mainly, they could announce that they're going to increase their purchases of exchange-traded funds. So that's basically the Japanese central bank buying Japanese stocks. But even if they do announce something like that, it's unlikely to do much in terms of calming investor nerves. So we've seen Japanese stock markets fall sharply. It might help a little bit in terms of equities there, but in terms of the Japanese economy, we shouldn't completely discount the possibility of other measures, but it looks like that Japan really has its hands tied at the moment, and it's got very limited options in terms of what it can do.
Now, Thursday we'll also see the Swiss National Bank meet, where again, it's not expected to change its policy, yes?
So that is right. So, and especially we had that ECB announcement this week where they kept interest rates unchanged, even though many traders were expecting a rate cut. So now there's even less pressure on the SNB to follow in the ECB's footsteps. But of course, the SNB has another tool which it prefers to use, and that is they intervene in the foreign exchange markets. And there's already signs that they have been intervening in recent days, mainly to keep the franc down against the euro, because the euro has come under pressure during this crisis, and Swiss franc is a safe haven. So we will probably get a tougher language in terms of the exchange rate, warning that they will continue intervening or that they might intervene. But other than that, we shouldn't really expect much from the SNB.
I see. And now let's change the subject a little bit. I know economic data might be a little irrelevant to markets given all the developments we have going on lately, but I think it's important to have a look at New Zealand's GDP for Q4. It's reporting it on Thursday because we have the RBNZ meeting coming up on March 25th. Now, do you think the GDP will have much impact on the RBNZ's decision?
Well, that's an interesting question because the data will be out of date. It was for the Q4, and now given how dramatically things have changed in terms of the outlook with the virus outbreak, you could say that the data shouldn't really matter in terms of what the RBNZ decides the following week. But of course, it will matter whether or not the New Zealand economy went into this crisis at a stronger point than expected, or at a much weaker point. So it could be a deciding factor in terms of the RBNZ deciding whether to go for a 50 basis points cut or a 25 basis points cut, or perhaps an even bigger cut than that. So it could still be fairly important for the RBNZ meeting coming up in the following week.
I see. Looks like it's going to be a very interesting week indeed.
Rafi,
thank you for joining me today, and thank you for watching the Weekly Outlook here at XM.com.